Hey everybody, this is Kirk Mancill with Sky Realty. Thanks for joining us. I'm here with Josh Flores with Supreme Lending. He's going to give us a couple of ideas about underwriting and how things may be easing up a little bit in the industry, mortgage underwriting that is. Josh, what can you tell us about how things may have changed from the extremes of underwriting from that was brought on by the mortgage crisis and so forth several years ago, and what's changing now that might make things a little easier for folks to get a loan?
Sure. Yeah. So the way we describe it oftentimes is the pendulum swinging. So back in 2008 with the mortgage meltdown and the housing crisis, you had a lot of underwriting guidelines that swung very, very conservative to basically protect a lot of the banks from getting any type of bad loans in. So they really had to be careful about that. One really good example recently that just came out is in regards to if you're selling a primary residence, and then you're buying another primary residence. Sometimes people weren't able to sell before they could buy, or they have children, they wanted to just buy beforehand.
Or not enough equity.
Used to be a ton of guidelines in regards to having a lot of money in reserves. There was no ability to count a rental, or like if you your intention was to rent the property out potentially, you weren't able to count that income in the past. So you were literally qualifying with two mortgages, which for a lot of people was difficult. Now they've changed the rules on that, and now you don't have to have all those reserves, you don't have to have all the rental income, and they can still take that mortgage out and allow you to purchase your next house, which is great.
Excellent. What about amount that you, like the minimal down payment that you can make? Is that changing at all? Or?
You know, definitely. It's a big question that comes up in regards to, do I have to have 20% down to purchase a house? Absolutely not. There's zero down programs for a lot of folks out there.
Really?
3% down, 5% down, any numeral that you want.
Zero downs other than USDA, or?
Absolutely. Yeah, bond programs are out there. Now, some of those programs, the programs are going to require certain income restrictions and different ideas. They don't want everybody getting into the zero down bond related programs. They're meant for specific types. In other words, if you're a millionaire, put a little bit of money down is what they're asking you to do. So.
All right, well, very cool. So there you have it. We've got a little bit of easing up maybe in the industry, and who knows exactly where this might take us. But again, thanks for joining us today, and have a great day out there in Austin, Texas.